Right, guys, just do a quick check. Will you be able to hear? Fine. Hey, good to have you guys back for episode 2. Hey, so for those of you who are first time here, this is the second episode that we are talking about in the whole picture of 4 trading pillars. Okay, if you miss it, you can always go back to the first episode, right? The idea here is you want to combine everything. Hey, so for those of you who actually joined us last Tuesday, right? 2 days ago on the very first one where we talk about fundamental analysis. Hope you guys benefited from it, and of course, welcome back. For this second one here, right? Really excited to have you guys together. I'm not sure how many of you actually did your have like mini homework or assignment, okay? That we actually got you to practice on. I think that's very important, okay? So what we're gonna do is we're gonna take a quick look on that, okay, a very quick one, and then we're gonna dive into today's topic here called sentiment analysis, okay, and this is the second pillar, which is also very important, okay. So now let's go over to the Bank of Canada first, okay. Then after that we'll start on today's topic, right? So last session, okay, what we talk about is okay, the task here is for you to go and understand what the fundamental bias on the BOC, right? Bank of Canada, right? And the idea here is again, give yourself the big picture as to what the central bank are doing, okay? And that will position yourself to help you in the direction that you're gonna trade when you're looking at the Canadian dollar. Okay, so we're gonna do a quick review. Okay, and if you've done your homework, it's a good time for you to cross check as well to see if what you have analyzed based on this here is it valid. Okay, so this is the latest one, right? So you can see over here, this is released on 28th, which is yesterday night. Okay, so I will just highlight some of the key points so that we won't take too much time on this, right? This is just a very quick review on it. Okay, so first thing first, the first statement over here, basically what is stating, okay, if I just increase the size a little bit, what is stating is basically they're not gonna change their interest rate, okay, and they're gonna continue its quantitative easing program, right, which means that it's actually bearish because they're gonna print more money. Okay, but one key note for all of you to take note is they stated over here that their QE program is gonna be shifted towards more longer term bonds, okay, and they say over here which has a more direct influence towards borrowing rate and of course household and businesses. Okay, so far it's basically bearish, which means that they are actually looking to continue printing money, okay, and of course they're gonna continue maintaining a very low interest rate, okay, and then all this here they are just basically talking about the current economy, okay, and there's one part here that is very important that I want all of you to also understand here, okay. Okay, so over here they say, right, the governing council will hold the policy interest rate at the effective lower bound until the economy is at 2% inflation target. Okay, and they give you a very specific date. Okay, so they say over here in our current projection that does not happen until 2023. Okay, so what does this mean to you, right? This is so obvious, which means that the bank right now is looking at maintaining low interest rate all the way until 2023. Okay, so that's like 3 years into it, right? And basically, as a trader, now that I know Bank of Canada, okay, is not gonna increase interest rate until 2023, and if let's say from now towards 2023, okay, somewhere in between they start to say, hey, no, we are looking that the economy is growing, now we're gonna increase rate. What this tells me is that a lot of traders will jump into being bullish on the Canadian. Okay, so this is very important because it's so clear, right? They say that they will not increase rate until 2023, but if suddenly they change, okay, that's where as a trader your opportunity to buy the Canadian comes in. Okay, so that's something that's very important and very obvious. Okay, so of course they also say the bank is continuing its QE program. Okay, so this is the key highlight. Again, very simple, very straightforward. All you really need to do is understand the principles that we cover in fundamental, and then from here you'll be able to apply that. Okay, so I hope you guys who did your homework kind of like able to compare what you actually extract from it, and over here I just give you kind of like the answers, right? Okay, so that's on it. And let's go back to today's focus, right, on sentiment analysis. Okay, so a very quick one again. The webinar that you are actually participating right now is sponsored by OctaFX. So a very quick one to kind of like, if you haven't done that, okay, follow them on Facebook and of course Instagram. Okay, and of course, for those of you who are now attending this live webinar, you do have the bonus. Okay, so again, you can reach out to them if you're not sure how to claim it. Okay, so you have 100% deposit bonus for all webinars attendees. Okay, so again, a quick shout out to OctaFX for sponsoring this webinar so that you guys are actually able to benefit from today's learning as well. Okay, and I'm not gonna spend too much time to talk about myself. Just for those who haven't really, first time coming here, first time seeing me, hearing me, then my name is Kayong. You can follow me on social media as well. I started my trading back in 2012. Okay, and since 2015, I've been full-time trading, and of course training traders and investors around the world, especially Southeast Asia. Okay, so that's a very quick one about me. And I want to share with you here is more important is this whole entire webinar series are things that are very practical, okay? Which means that I use them myself, okay? It's not some theory stuff that you hear on the internet or such, okay? This concept, these principles that you are learning from this webinar series are actual things that I apply into my trading as well, and hopefully you'll be able to benefit from it. That's my intention. Okay, and I want to be as transparent as I can. So this is actually my performance last year in 2019. Okay, this is my performance in 2020. You can see up to October, right? That's the latest that I can get for you. Okay, so there's ups and downs. That's a very real part of trading. Okay, I'm also applying these principles into the stock market, into investing. This is my investment portfolio performance to date. Okay, so again, there's losing months, there's performing months. Okay, so I want to show you this really to give you that confidence that what we're going to talk about is things that are practical. Okay, and if you really pay attention to it, you go and apply it. Okay, after this webinars, you'll be able to see the benefit for yourself as well. Okay, so that's a little bit about myself. A quick overview again as to where we are today. Okay, so if you're someone who is really serious about trading, okay, you want to take your trading to the next level, you need to take all these 4 webinars. Don't miss them. Okay. Of course, you'll be able to watch the replay, but again, you won't be interacting and you won't be able to ask questions, right? So join us in a live webinar. This is the second episode where we talk about sentiment analysis. Okay, so in total, there are 4, right? You can see in the slide. Macro, sentiment, technical, and risk management. Today, we're going to talk about sentiment. Next Tuesday, we're going to talk about technical. And then, of course, next Thursday, we're going to talk about risk management. And we're going to put everything together to show you different case studies, to show you some live trades that we can actually potentially take together as well. Okay, so this is the 4 trading pillars. And the idea here is you want to put all of them together when you approach and trade the market so that you have a holistic understanding. Okay, so that's key. So now, a quick one, right? Some of you perhaps have not heard about this term here called sentiment analysis. Then you might thinking like, what is this? Okay. Now, again, my objective, my role here is to make it as simple as I can so that even if you're very new to trading, you are able to understand and appreciate it. But at the same time, I want to make sure that the important elements are still there. Right? So just imagine that the market, okay, who is trading the market? People. Okay, so even if let's say we talk about like fund managers, we talk about maybe the algo, right, the bigger funds, the hedge funds. Essentially, everyone that trades the market are human. Okay, and we as humans, we do have emotions, we do have psychology, right? So because we are the participant in the market, naturally the market will also have emotions. The market will also have psychology. Okay, so to study the market emotion and to study the market psychology is what we call sentiment analysis. Okay, so in the slides here, I put market sentiment basically reflects how the market is feeling at that moment. Okay, so it's like a feel. Okay, but of course, I'll share with you some of the indicators to help you understand, is the market feeling fearful or the market feeling greedy? Okay, so this part here as a trader is very important for us to understand what the market is feeling at this very moment, because it's gonna tell us, is the market gonna be bullish, is the market gonna be bearish, is there something we need to be concerned of, or is it time that we stay away and don't trade the market? Okay, so sentiment analysis give us the understanding so that we don't get lost. Okay, so the idea here is we want to make sense as to right now, okay, what the market is feeling. Okay, so now it seems like it might sound a bit confusing, right? So you might think about, okay, so what is gonna affect the feeling of the market? What is gonna affect the sentiment? Okay, these are some example, okay, of what can affect the market. So for example, okay, just gonna read out a few. Deviation from, let's say, economic indicators, deviation from, let's say, central bank announcement, right? So just now we talked about Bank of Canada. Okay? I want to give you actual example. Just now we talk about Bank of Canada, right? And in the statement, it states that from now to 2023, they are not gonna look to increase interest rate. What if, let's say, next year, 2021, okay, somewhere around December period or November period, and then they start to say, okay, we are gonna start increasing rate now. Okay, so that's a sudden shift, right? Because at one point in time they say they don't, and right now they say they are gonna do it. So that's a deviation. That's gonna affect market sentiment as well. Okay. Now, if you take a look at 2008 financial crisis, that's also a market sentiment. If you take a look at what happened in March this year, where COVID-19 started, spreading globally, and then all the economy starts to lock down, that's also market sentiment being affected. Okay. If we trade the currency market, okay, and you might start to think that, oh, if we trade currency market, whatever happened in the stock is not going to affect me. You're wrong. Okay, whatever happened in the stock market, in the commodities market, in the, let's say, gold, silver, oil, or even in the bonds market, okay, it's gonna affect the currency market as well, because we are talking about financial market as a whole. Okay, so I'm gonna share with you a little bit more into that as well. Of course, if there's a war that's gonna happen in terms of sentiment as well, it's gonna affect it. Okay, so like for example, US-China trade war, right? That will affect the sentiment. Okay, and of course there are many others. But at the end of the day, right, you just want to ask yourself this question. Okay, is this particular event that is happening, or is this particular news gonna cause global fear and uncertainty? Very simple. Okay, so for example, if you talk about, let's say, I don't know, Malaysia, suddenly no electricity, okay, or no water, right? So in Malaysia, past few weeks, I remember, or last month, there's a period where there's no water, right? So ask yourself, would that ease of event or that news gonna cause fear and uncertainty in the global world? It won't. Okay, so that particular event won't affect the market. Okay, so what is gonna affect the market sentiment globally? US presidential election. Okay, ask yourself, will this particular event causes either fear or uncertainty? Definitely, right? If it's talking about US presidential election, there is uncertainty. You do not know Trump is gonna win or Biden is gonna win. You even won't know, like, if Trump wins, is it a good thing? Or if Biden win, is it gonna be a good thing? Nobody knows. So there's a lot of uncertainty. Definitely that will affect sentiment. Okay. Now, what about, let's say, China US trade war? That's also gonna be affecting uncertainty. You do not know what's happening. When COVID happens, first time outbreak, all economy starts to lock down, close down. That's also uncertainty. That's also fear, because nobody knows what's happening. Okay, so all this event, as long as they are gonna affect the global environment, causing fear and uncertainty, is gonna affect sentiment. Okay, so that's a very quick check. Okay, whether an event will affect the sentiment. Okay, this is important. Now that you know that there are certain things going to affect market sentiment, I want to introduce you to this term here called risk environment. Okay, because as traders, you cannot say, oh, the market panic. Okay, there's certain terminology that we use to communicate, right? And over here we talk about risk environment. Okay, so just remember there's two types: risk off, risk on. Okay. Now, before we go deeper, right? A lot of times, a lot of traders, when they first come into sentiment analysis, they get confused. What is risk on? What is risk off? Okay, so let me explain so that you guys can understand. Okay, I want you to imagine, like, today we have a light, okay, and lights, okay, and we have a switch to turn this light on or to turn off the light. Okay, so that's why you can like switch on, switch off, switch on, switch off. Okay, now instead of that switch being turning on and off the light, now I want you to imagine this switch is gonna turn on and off the risk meter. Okay, so as an investor right now, put ourselves in the shoe of an investor. Okay, so if today as an investor I'm willing to take higher risk, okay, I'm willing to go and take high risk for a higher return, then I will turn on my risk meter. Okay, so I switch my risk on so that I'm willing to take a higher risk. Okay, think about that, right? So risk on means I switch on. Okay, now the opposite here is if I'm in the risk off, meaning I switch it off, I'm no longer interested to take high risk. I want safe. Okay, so to put that into perspective, risk on, I'm willing to take high risk. Risk off, I want safer investment. Okay, so when would I want to be safe? When would I okay to take high risk? So when things are uncertain, for example, US presidential election, we don't know the outcome. We won't know what will gonna happen. Whatever president is gonna be elected, we don't know what's gonna happen, right? So there's uncertainty. There's a certain fear element. As an investor, I want safe. I don't want to take risk. So I'll be in a risk on, risk off mode. Okay. Now, what happens if, let's say, after everything settled down and then things are okay, maybe even COVID is done, we have a vaccine, everything starts to pick back up, then things starts to seem pretty okay. Okay. So during that period, as an investor, I'm willing to take higher risks. Okay. So then I'll be in a risk on mode. So think about this. Whenever we talk about sentiment analysis, there's this two keyword: risk on, risk off. Okay. Now, once you understand when is risk on, when is risk off, then subsequently what I'm going to share with you should be very easy, but at the same time very important. Okay, you might suddenly have that. That's why the market moved like that. Okay. So over here, we're gonna introduce to you some specific currency that you want to take note of. Okay, so the first group of this currency, we call it safe haven currency. Okay, so they are your dollar, the USD, CHF, Swiss franc, okay, and your Japanese yen. These three currencies are what we consider as safe haven. Okay, now the term safe haven, if this is the first time you hear about, is basically referring to like safe asset. Okay, of course, in today's context, if you go beyond currency, gold, silver, they are safe haven asset. Okay, and with the current discussion of Bitcoin, cryptocurrency, right? Bitcoin is potentially turning into another safe haven as well. Okay, but today we focus on currency first, right? So the dollar, the Swiss franc, the Japanese yen, they are considered your safe haven. So safe haven means that they are safer asset. So when investors are panicked, they are in a fear, uncertain environment, they go into risk off, then what will they do? They'll actually put their money into like dollar, Swiss franc, Japanese yen. Okay, so that's what it means, right? So I want you to remember that dollar, Swiss franc, Japanese yen, they are safe haven currency. Okay, if today you want to add on to the list, gold and silver, they are also safe haven. Okay, and of course, if today you are into Bitcoin, then Bitcoin can potentially also become a safe haven. Okay, so these are the key ideas, right? So this table helps to summarize what we just talked about. Okay, so again, if you're on your computer, do a screenshot or take a photo of this, right? Very important. Now, this table here, I go beyond currency market. Okay, so you can see the first one, we talk about equities and stock market. Okay, now, you can even apply this right now immediately, right? If you're following the US stock market, you realize that for this week itself, right, since Friday until now, since last Friday until now, okay, the equity market has been falling. Okay, so think about it. Why is it dropping, right? If you put into context now that you understand, sentiment, you understand risk on, risk off. Okay, put into context, right? We are getting very near towards the US presidential election. Okay, in fact, that's gonna happen like 3rd of November, right? Which is early next week. Okay, so we are getting very close. The uncertainty, the fear is definitely there. Okay, and that's where now you understand risk on and risk off. We are in a risk off environment because uncertain. I want to switch off my risk meter. So that's affecting the US equity market. Okay, then take a look at what's happening now in the currency market: the dollar, the yen, the Swiss franc. Okay, as we are speaking, you realize that since yesterday until today, the yen has fallen. That means yen pairs, right? Which means like Aussie yen actually dropped a lot, right? So yen actually strengthened. That's why your Aussie yen dropped. Okay, if you take a look at dollar pairs, it's also falling. Okay, so why is it the case? Because again, based on sentiment, it's actually affecting the currency market as well. Okay, now if you take a look at Aussie, New Zealand, they are actually slightly different, or I would say opposite, compared to your safe haven. Okay, so when the dollar falls, then your Aussie and New Zealand tends to rise, and of course vice versa. Okay, if your dollar rise, then your Aussie and New Zealand tends to fall. Okay, so that's why sometimes you might hear traders say like Aussie yen, okay, AUD JPY, right? Aussie yen is a very good currency pair to play around with when you're looking at sentiment. Okay, because very clear direction, right? If you just take a look at Aussie yen, New Zealand yen from yesterday to today, you actually saw it's a very clear move, right? Because again, sentiment when it's playing out, one go up, one come down, that pair move very clearly. Okay. Now I also included bond over here. Okay, so bond is another safe asset. Okay, together with gold and silver, so they move in tandem, right? Bond, gold, silver. If you want, add in Bitcoin as well, right? But I personally don't suggest you guys to go and touch Bitcoin. Okay, now let me explain a little bit this concept as to why during certain environment, certain asset will rise while other asset will fall. Okay, this concept here is based on what we call money flow. Okay. Now, if today you are only focusing on FX, you're an FX trader, currency trader, right? You don't touch on other instrument or asset, it's perfectly fine. But it's important for you to understand this concept and principle called money flow. Okay, because you are in the financial market, you need to know this principle. Now, what is money flow? Okay, now over here I put down a few assets, right? You can see stock, currency, bond, commodity. Okay, let's just talk about this four assets. Now, in the financial market, these four assets, they are always fighting and competing for money. Okay, I repeat that again. The four asset in the financial market is always competing for money. Okay, so think about this as like four option. Okay, you have option A, B, C, D, and as an investor, you would always want to put your money where you can actually generate the best return. So they are fighting for my money. Okay, as an investor, they are fighting for my money, right? So with that, that is where the principle of money flow comes in. So if option A right now is like the best performer, I will put more money there. But if suddenly option B now looks better, I will take money out from A and put money at B. Okay, so that's called money flow. Okay, now once you kind of like understand that principle, right, you can also see why when the equities market drop, your bond and gold will actually go up, because money will flow out from the equities market and it needs to go somewhere. Where will it go? It go into your bond, gold, and silver. Okay, so it flows around. Okay, so that's the idea behind it. Okay, so I hope with today's sharing you get a big picture and understanding about sentiment, risk on, risk off, and of course how money operates within and flow within the financial market. Okay, so let me move a little bit, okay, into the second component of sentiment. Okay, so that is what we call risk on, risk off, right? Risk environment. Now the second part here is what we talk about correlation. Okay, this is important because again, if today you are only trading the currency market, it's perfectly fine, but you need to understand what other factors can affect your currency. Okay, so there's this category of currency called the commodity dollars. Short, it's called ComDollars. Okay, so they are called commodity dollars. The three currency here is Aussie, New Zealand, and of course Canadian. Okay, now why they are called the ComDollars? Because of one reason. Okay, these countries are very tied up with a certain commodities. Okay, and therefore their currency will have a very close relationship with the commodity itself. Okay, so again, this is not something like very complicated. It's very direct relationship. Okay, if you're talking about Australia dollar, then of course, commodity like gold, iron ore has a direct impact into Australia. Okay, if you're talking about New Zealand, then of course like daily goods product like milk is gonna affect your New Zealand dollar, and of course most of you would probably be aware already. The Canadian dollar is very closely related to oil. Okay, so when oil actually drops, then Canadian would likely weaken. If oil strengthen, then your Canadian would likely also strengthen. Okay, so this relationship is important because again, if you're trading on a currency market, suddenly the Canadian dollar move, at least you know, okay, maybe the oil market is moving, therefore the Canadian is affected as well. Right? So as traders, you want to know all this because the more you know, the more tools that you have, the more confidence you have in whole trading journey. Okay, so that's the idea why we always emphasize on the 4 pillars, right? Okay, so I hope so far it's clear. Okay, good. Again, I will answer all your questions at the second part of the webinar, right? So for now, we'll go through the content first, okay, and then we'll have a Q&A. I want to make sure all your questions are answered. Okay, good. So now, let me put this into perspective as well, right? So some of you might be asking like, okay, then right now, how do I know whether we are in a risk on or risk off? Okay, so that's a very good and clear website. Okay, over here, it's actually from money.cnn.com. Okay, it's public, which means that all of you can access to it, right? Actually, all you need to do is just Google Fear and Greed Index. Okay, search for the website here called money.cnn.com. Okay, so over here, if you look at it, they do have a total. As I zoom in a little bit, okay, they total have a 7 indicators that they use to kind of determine whether right now we are in a risk on or we are in a risk off. Okay, of course, if you like to study more in that, they also even share with you like what are these 7 indicators and stuff. Right, but we take a very quick look over here. Right, the first indicator here says extreme greed, which means that very greedy is bullish, is risk on. Okay, junk bond is neutral, so nothing in the middle, right? Stock price strength is another indicator. They say here fear. Okay, fear means uncertainty, means we are in a risk off. Okay, so another one here they are looking at is stock price breadth is fear also. Market momentum is fear also. Safe haven demand suggests is extreme fear. Okay, and market volatility is extreme fear. So you just take a look roughly based on these 7 indicators. One of it is greed, one of it is neutral, the rest of it are all fear or extreme fear. So if you just generally put them together, we are now in the risk off mode. Okay, so now again, quick one. If it's a risk off mode, what does it mean? Meaning if you're looking at currency, your Australian New Zealand is going to weaken. If you're looking at dollar, Japan, Swiss yen, okay, they are going to be strengthening. Now if you just put this together, okay, Aussie yen, Aussie dollar, Aussie franc, or even the New Zealand yen, New Zealand dollar, New Zealand franc is very clear in the direction as for these 2 days. Okay, so if you go into the charts, okay, this is on the 4-hour, right? So let me go to a lower time frame. This is on 1 hour. Okay, take a look at from where we were yesterday until today. Okay, so this is today is the 29th, right? So this is where 28 is. So I put a vertical line. Okay, so the vertical line is where yesterday started, okay, and where we are today. Okay, so I'm not saying that the move down here is purely based on sentiment itself, okay, but I want you to see that sentiment is one of the factor that can move your market price. Okay, and if today you understand that, right, you'll be able to spot opportunities based on charts as well. Okay, so this one we'll talk about it next webinar when we take a look at technical charts. Okay, but today I want you to see that relationship first, right? Sentiment can affect the price movement. Okay, now if I go to, let's say, another chart. Okay, Australia, Japanese yen. Okay, same thing, right? The last few days. But I want to show you even on, let's say, larger time frame, right? Okay, this year in March, okay, that's where COVID started. That's where the global lockdown happens. Okay, take a look at what happened in March. Okay, this was end Feb. Okay, this is a weekly chart, right? So let me go to daily. Look at this. Okay, this here is 24th of Feb, which is near the end of February. Okay, and that's where the whole COVID things break out, right? Towards end of March. That's where globally everyone starts panicking. Country starts to lock down. Okay, so there's fear in it, and that's what happened. Okay, now if you take a look back all the way to like 2008, okay, again, same thing, right? 2008 financial crisis, subprime mortgage causes fear in the market. Same thing that's happening over here, right? So this is where the end of 2008 is, and then of course you can see from there that's that huge drop. Okay, so again, I want to highlight here is sentiment is not the only thing that's gonna move the market, but if today you are equipped with this tool and this knowledge, you'll be able to, number one, either protect yourself, okay, or number two, you'll be able to capitalize on it and make money. Okay, so that's the idea that I want to highlight for you guys. Yeah. So hope is clear so far. Okay, so I'm gonna open up and maybe get answer some of the questions that you guys have, right? Help you clarify on this. Right? Let Okay, good. If you guys have any question now, okay, is the good time to actually post it in the chat. I'm monitoring it, and I would answer your question to help you clarify this concept, this topic that we talk. Okay, so I see one good question by Ivorism, okay, asking that a lot of time, the information and analysis confuses us. How to overcome that and get a clear picture? Okay, now that's a very good question, and I believe that if today you are very new into trading, okay, you might also experience that. Okay, and it's common, right? Because when I started, it's also that there's that phase where there's just so many information, so many strategy. Especially if today you go to the forum, okay, like Forex Factory, right? You go to the forum, there's a thread, and then all the different strategies, like, so which one should I follow? Which one is good? Which one can make money? Okay, it's very common. Okay, I know. Okay, but the the most important thing I want you to do is if today you're getting like over too many information overload, or you're getting confused, okay, pick one first. Okay, now today this whole webinar series, right, we are doing is 4 pillars. Okay, the objective here is to give you a holistic understanding, but at the start, okay, you need to pick one to have like be the master of it first, right? You need to be well equipped with one, then you move on to the next, and then you move on to the next. Okay, so the idea here is each of us are different. Some people will come into the market and say that I prefer fundamental. Some might say, oh, I prefer short-term trading. So sentiment might be the one that I want to focus on. Or some of you might say, I don't care about fundamental. I just look at the chart. Okay, so again, if you are today feeling that you are a bit overloaded, too many information, a bit confused, pick one. Okay, make sure you equip yourself and be very good at that one, then only you move on to another. Okay, same thing if today we are talking about technical, right? There are so many different ways to analyze a chart. There's different indicators as well. Again, if you're getting confused like which indicator should you use and things like that, then pick one. Okay, pick the one that you feel the most comfortable with, the one that you like the most, and then practice on it. Okay, eventually you decide and say that, okay, this one doesn't work for me, then that's where you move on. Okay, so pick one. Hope that helps. Okay, Nigel asks, after the president election, will the market go up? Okay. Nigel, you are asking as if like I have a crystal ball and then I know exactly what's gonna happen, right? I can't answer you that question because I also won't know. Okay, nobody will know if today someone tells you that okay, the market will go up after the election or will come down after the election. That person probably is also guessing. Okay, maybe the person is making a very good guess, but honest answer to tell you is that nobody will know. Okay, but as traders, again, you don't need to know everything. You just need to pick the high probability setup. Okay, so this high probability can be based on fundamental, it can be based on sentiment, it can also be based on technical. Okay, let me take a look at the dates. Oh, okay, good. Our next webinar is on the 3rd of November, right? Which is exactly when the election is gonna happen. Okay, where we're gonna talk about technical, right? So because I wanted to share with you guys that based on the technical way, the technical analysis that I do based on that, okay, is able to kind of give us a guidance in terms of the direction of where price will hit. Okay, so we're gonna talk about that next Tuesday. Okay, and from there, once you learn that skill set through this webinar, you'll be able to also apply that. Okay, and that will help you to guide like whether is it gonna go up or down. Okay, but again, nobody will know, right? So I can't answer you that. Okay. Uh, oh, Kairu here says that if Trump wins, stock is bullish. Okay, Kairu might be right, but not all stock. Okay, to give you guys a rough idea, Trump is pro business. Okay, Biden is more towards like energy, right? Renewable energy. So if you're looking at that, okay, if Trump wins, focus on technology. Okay, like Facebook, Amazon, right? Those are the companies you want to focus on. Microsoft. If Biden is gonna win, your focus maybe is on renewable energy. Okay, renewable energy companies. US is like your Nexera, those kind of companies. Okay, um, this. Okay, so this understanding of why I know this is because if you go and study the campaign that they're running, the policy that they're running, uh, they are pushing for different things, right? So depending on who wins, the campaign rolls out, it will benefit different sector and company. Okay, so that's the idea behind. Yeah, Niger says, I think the market will go slow. Yeah, right. So definitely because right now until next, again, if you apply sentiment that what we talk about, right? Right now until the election is gonna come, there's so much uncertainty. Okay, put yourself as like a fund manager, a hedge fund, right? What will you do if you're not sure? You will not actually put your money at risk, right? You just sit out, be patient. Okay. So when every fund manager also decide to not trade, not put their money at risk, then the market will be slow. Okay, so that can also be the understanding of risk on, risk off. Okay, might help to protect yourself as well. Okay, so good point there. Okay, market will be slow. Okay, it's still uncertain. Yes, that's true. Okay, asks why when risk on gold will fall, it should go up, right? Okay, to clarify that, okay, I think that's a common question that many traders actually get confused. Okay, so let me go back to the slide on that. Okay, now good question. Okay, so this is where why risk on gold will fall. Okay, now okay, gold. Let me talk about gold as commodity first, right? A lot of people think that gold has a lot of fundamental value to it. Okay, I can tell you that fundamentally gold has no value. Okay, when I mean fundamental gold has no value means in the industrial usage of it, right? Gold has not much of a usage other than your like jewelry, okay? Um, but other than that, there's not much of a usage, okay? So industrial value is close to zero. If you compare to like oil, you compare to silver, these two commodities has industrial value, okay? Because oil we need it, right? Silver we also need it because for the production of like um your industrial production all uses silver, okay? But understand that gold is an asset that's very interesting and unique because it is currently backed by US dollar. Okay, it's currently backed by US dollar. Okay, so what does it mean? It means that when every other currency is uncertain, is fluctuating, the number one thing that people will think about that is safe because it's backed by the US dollar is gonna be gold. Okay, or eventually it might be Bitcoin. Okay, so that's a unique characteristic of gold. Okay, so it doesn't give us any interest. The value of it is backed by dollar. Okay, and the price fluctuation of it is purely based on demand and supply from traders. That's all. Okay, so during risk on environment, okay, when things are good, everything looks pretty, stable. Okay, as an investor, I wouldn't put my money in gold because gold doesn't give me any return. Okay, I'm gonna put money at, let's say, the equities market because as a stock, okay, it's gonna give me number one dividend. When the stock economy grow, the company performs better, the price will also go up, right? So from there, I also can profit. But gold itself is just that asset. It doesn't give me any return. Okay, unless that suddenly everyone goes into it that pushes price up based on demand. But during normal times, everyone is not looking at it. Okay, it's gonna go into stock. Okay, so that for that reason, during risk on, when things are good, right, normally your gold price will drop. Okay, but when things goes bad, everyone starts panicking. Okay, that's where your gold is gonna rally because the money will go into the gold market, the silver market. Okay, so I hope that's clear. You need to first understand, be very clear what is risk on and what's risk off. Okay, risk on doesn't mean it's risky. Risk on means that I am willing to take risk. Okay, so that's the idea. Hope that's clearer. Nigel asks, gold and oil not good for going in now. Yes. Since we are on this, let me give you some sharing. Okay, so again, this is a disclaimer here, right? I'm not telling you to take a specific trade. I'm sharing with you the idea. I'm sharing with you what I'm doing only. Okay. Now, if you take a look at gold, okay, this we'll talk a little bit more next week. Okay, but I want to just quickly share with you my view, my analysis. Okay, and of course based on fundamental, combining it a little bit. Okay, and of course combining it with a little bit of sentiment. Okay, but not so much of sentiment on this idea here. Okay, mainly fundamental. Combine a little bit of that, and of course next week we're going to talk about technical. Now, Nigel here actually mentioned gold and oil not good for going in now. Okay, I agree. Okay, first thing here is my bias. Okay, for the longer term is I'm bullish on gold and silver. Okay, meaning I'm looking to buy gold and silver for the long run for a very simple fundamental reason. Right now, the dollar is getting printed a lot. The Fed is in QE. Okay, the dollar is there's gonna be increasing of supply into the economy. Now, when eventually the market starts to realize that there's too much dollar, the value of the dollar is not worth that high, eventually they're gonna dump the dollar and the money needs to flow somewhere. Okay, and they're gonna flow into precious metal like gold and silver. Okay, so for that fundamental reason itself is sufficient for me to be very confident in buying gold, but of course not now. Okay, because the technical chart right now tells me is not yet ready. Okay, this is on of course the weekly chart. On the daily, okay, so this one here you guys will know a little bit more when we talk about technical next week. I'll just give you some quick guidance right now, right? There's a very high chance that gold will continue falling and it will break the 1849 or 1850 level. Okay, so if I zoom in a little bit, there's a very high possibility that gold will continue falling and it will break that 1849, 1850 level. Okay, so now is not the time to buy yet. Okay, next week we'll talk a little bit more into technical, but just wanted to share with you that. Okay, okay, there's someone named in Japanese. I can't read your name. Okay, but the question is that explain. Oh, it's not correct. It just basically statement, right? That explain why USD has been strengthening. Yeah, right. So the idea here is again, if today you guys understand sentiment, okay, you have this knowledge in your toolkit when you're trading, it's able to help you understand the market a little bit because when things happen, you now know, okay, if this happened, this event happened, we are in risk on, we are in risk off, what currency is going to be affected. Okay, so that gives you clarity. Okay, Cairo say risk off people move to safe haven currency. Yes, Cairo, you're right. Okay, that's correct. Okay, so again, there's one question here. For both safe haven asset gold and USD, will sentiment analysis be relevant for the relationship between them? Okay, this is another question I always get from a lot of traders, right? If today you are maybe still slightly new in your journey or experience in trading, right? This is a common misconception, okay? And since you brought it up, I want to address this, okay? Because a lot of people misunderstand this point, okay? Now, when today you trade gold, okay, XAU, right, is naturally you need to trade it with a specific currency, and most of the time is XAU USD. Okay, so you're trading gold against US dollar, right? So a lot of people have the misconception that if gold drop, okay, that means this pair, right? If XAU USD drop, it means that gold drops and therefore dollar strengthened. Okay, no, that understanding is not correct. Okay, why? Because gold against USD both can drop at the same time, but because gold drops more than dollar, okay, therefore this pair drops. Okay, I hope you understand, right? Okay, again, if I put this into perspective, Okay, let me type this in. Okay, this is important because a lot of traders actually confuse, and if you don't get this right, it's gonna harm your trading. Okay, so over here, okay, we are looking at this pair, right? XAU against USD. Okay, I want you to see it as it's a ratio. Okay, so I think this math every one of us actually went through before, right? We learned this, I think, in primary school where we talk about ratio. The top is like the denominator, and then at the bottom is the denominator, right? So XAU USD, see it as a ratio, okay? So the idea here is that, okay, gold can drop and dollar can also drop. But if gold drops more than the dollar, then the entire ratio will also drop, okay? So the idea here is don't have the misunderstanding that if gold drop, dollar must go up, and if gold goes up, dollar must drop. No, it can move in same direction, but it's relative. Okay, so the idea here is that based on safe haven, right? When things are uncertain, there's fear in it. Okay, we are in a risk off. We want to go into safe haven. Gold is one safe haven. Dollar is also a safe haven. But then the question here is which of this asset, gold versus the dollar, which one will have more demand? Okay, when there's more demand of that, the price of that particular asset will actually go up much higher. Okay, now this one here, I always give this analogy when we do sharing on this topic here also, right? Now imagine today you have on the table, right? Imagine today on the table, wherever you are, on your table right now, you have a few assets. You have gold bar, you have the dollar, okay? You have maybe Malaysia ringgit, you have Singapore dollar, you have some Thai baht, okay? You have some Vietnam dong, you have some Indonesia rupiah, right? And then suddenly, wherever you are, there's fire, right? Maybe your house is on fire and you are in a panic state, right? You need to run. You need to save yourself, okay? So on the table right now, there are so many different assets. Which one will you naturally grab and run if you need to pick one, okay? Naturally, you will need to pick one and run. You can only choose one, right? So on your table, you have gold, you have dollar, you have Malaysia ringgit, Indonesia rupiah, you have Thai baht, you have Singapore dollar. Okay, which currency will you grab? Okay, now most people would say you need to think, of course, grab the US dollar, right? So that natural instinct, that natural reflex is where when things really happen in the financial market, most traders and investors will go towards the USD. Okay. Will you go and grab gold bar at the very instant? Probably not, because again, it's heavy, okay? It's not so liquid, right? So that's a little bit in the analogy to help you understand between these two gold and dollar relation. Okay, so I hope that part is clear. So I hope that part is clear. Huh? Good. Hey, actually asked, gold should go up during uncertainty, right? The answer is yes, correct. You are right. Okay. So you're correct, right? So again, let me go back to the slides to make sure everyone is aligned and get this correct. So if today is uncertain, okay, if today is uncertain, we are in a risk off. So I want you to be very clear on this. If today you are uncertain, you are in a risk off, gold and silver will go up. Okay, so you are correct on that. Uh, yeah. So I think Ashraf is asking, can you do a table for all pairs? Which will go up, which will go down, and we'll see clearer in the table. This is the one. Okay, this is the one. Okay, take a screenshot or take your phone. You know, take a photo of this. Right, this is the that we're. Um. Okay. Muhammad asked a good question as well. So if we follow our own confirmation, we focus on fundamental and technical, is it fine, or must we combine with sentiment? So, okay. Now, again, this is a very typical question that might relate to every one of you, right? That's attending this webinar right now. To answer that, right? There's again no holy grail in trading. There's no like the best strategy out there. Okay. So again, you want to find something that you are comfortable with, you're aligned with. Okay. So for me, let me share with you me, right? For me, I look at I actually have all these toolkits, right? But my weightage on this toolkit is not gonna be equally weighted. Meaning, okay, for me, a lot of my trading decision really based on technical first. Okay, so maybe out of like 100%, okay, 60 to 70% of my decision making process on buy, sell, where to buy, where to exit, it comes from technical, about 60 to 70% of the time. Okay, maybe about 20 plus percent comes from fundamental. Okay, for example, why I'm looking at buying gold and silver, because fundamentally I know, okay, there's a high chance that the dollar is going to weaken in the long term, and because I understand that relationship, I'm looking at gold, right? So that trade idea actually came from fundamental. Then the remaining small part of my analysis actually come from sentiment. Okay, so how I use sentiment is more of protecting myself. So for example, right now I know that the US election is coming, is getting very near. I know that the stock market is likely going to be affected. So if I'm looking to actually invest into it, I want to be patient. So that's how I use sentiment to protect more than to actually trade. Okay, so that is my style, but doesn't mean it's going to be exactly the same as what you're going to do. Okay, but once you have, again, I mentioned this in the last webinar, right? If you go to a buffet, usually what we do, we take a walk around the entire buffet restaurant to see what we have today, what is being served, and then we pick and choose what we want to eat, right? Okay. So same thing in trading. The idea here is with this four pillars, the idea is you take a walk, and then you start to know, okay, there's this way to analyzing, there's this way of analyzing, and then you choose whichever that fits you the best. Okay, so that's the idea behind it. So this concept clarified, right? Okay. Um, action. So Afif asked for yourself, what is your action during the market? What you gonna do? Okay. So I hope just now when I explained that, kind of give you an idea as well, right? So for me, I apply everything, but most of the time the weightage goes towards technical. Okay, Kairu asked a good question. Okay, gold and dollar both are safe haven, but now in risk off mode, why gold is currently bearish? Okay, again back to just now what I explained. I hope clearer now again, right? Both can be increasing. Okay, so of course, let me remove. Okay, so between gold and dollar, okay, both can be increasing. Okay, but let's say right now at this very moment the dollar is increasing more than gold itself. That means there's more demand for the dollar currency, less demand for gold, but there's still demand. Then as a whole over here, the gold price might still come down because relatively dollar is still rallying more. Okay, that's why the clearest instrument for you guys to trade based on sentiment is you pair up one that is gonna go up, one that's gonna go down. Okay, and based on this table here, the clearest one is of course like Aussie yen, New Zealand yen. Okay, so that's the clearest Aussie yen, New Zealand. Right, so yeah, right. So I think a lot of you are actually gonna be very excited for technical analysis, okay, because that's that's what that's one of the topic that attract most people, right? Yeah. Okay. So definitely, don't miss next week webinar on the. Okay. Kasan asks, no question, cause kind of blur. Yeah. Okay. I understand that it's perfectly fine. Okay. Especially if this is the first time you hear about all this terminology or these terms, it's gonna be a little bit blur. Okay. But the good thing here is this entire webinar is recorded on YouTube. You'll be able to review it as well. Okay. So I've, yeah, I can't pronounce, but there's a question here, right? So if Trump win or lose the election, that is what we call sentiment, right? What asset will be affected the most? Okay, okay, yes, okay. So again, U.S. presidential election is definitely a sentiment event, okay? Because number one, we do not know who is gonna win. Now, if let's say Trump wins, okay, we also don't know what's gonna happen, right? Because if you still recall 2016 for the past election between Trump and Clinton, everyone was saying that, well, if Trump win, US is gone. Okay, it's gonna be bad for US. Okay, but take a look from 2016 until today, right? The stock market actually went all-time high. Okay, under Trump administration. Okay, so again, a lot of all this uncertainty is going to happen around the US election. Okay, so definitely this is an sentiment news. Okay, this is a sentiment event when we're talking about election. Okay, so today, now that we went through this, you understand that, okay, you understood what is sentiment, how is it going to affect the market, and having in mind that the US presidential election is a piece of sentiment event. Okay, you realize that somehow you actually have that clarity right now in terms of, number one, why certain market move like that. Number two, you actually have that confidence whether you want to execute certain trade right now. Okay, so sentiment is not really like, okay, here you get in, here you get out, or your entry strategy. Okay, sentiment is not that. Okay, but sentiment provide us with that different analytical approach that might help us in terms of our confidence, our conviction, to protect ourselves, to understand the market a bit more. That's important for. Okay. Um, Okay, Terence here asks a pretty good question as well, right? What do you think of the economy currently, and what can we prepare for next year? Okay. Now I can tell you that the economy is not good. I think everyone know that, okay? But it's actually slightly better than what most have expected. Okay, which means a lot of people think that it's gonna be very, very bad for the long term. Okay, but based on what happened for the past few months, okay, so March was the very first hit that everyone got affected. Okay, but since March until now, we do see some kind of recovery. Okay, of course, if you are in Malaysia, that's a different case, right? Because we are now still in like CMCO, right? We do not know how many we're gonna have again. But if you take a look at the global perspective, there are few countries are already opening up. Okay, there are already also economies starting to pick up. Okay, so globally is not that bad. Okay, so in terms of how to prepare, again, depends on where you are. If you're in Malaysia, of course, businesses are still going to be affected depending on the government decision, right? How are we gonna is it gonna be opening up or not, and things like that, right? So locally, if you're in Malaysia, what you really need to take note of course, trading wise, okay, is more or less still the same as global, okay. But if you're talking about your personal, then it's always good to have some kind of savings, right? So for rainy days, that's the idea behind. Now next year, I would say globally, a lot of businesses have changed. Okay, if you take a look right now, everything is starting to go online. Okay, last year itself, I do not have so many online webinars, right? It's a lot of physical interaction last year, but right now, okay, a lot of things are going online. Going into next year, I can tell you things are shifting. Okay, so digital technology is gonna be the next necessary thing already. Okay, so if of course you have some knowledge into like certain stocks, okay, for example Zoom, okay, this year actually went up a lot. Okay, those are where the opportunity is gonna be, right? Technology. Okay, so I hope that helps. Okay, Matt who says Biden said if I win the election, I'll do a $2 trillion idea for people. So if Biden want market possible to go down. um yeah, right. So again, a lot of all these campaigns, you will never know what's gonna happen, right? Okay. So yeah, again, uncertainty, right? So that's the sense. Okay. Muhammad asks, what is more effective, fundamental or sentiment? Okay. Thus, we focus on fundamental and technical. Is it fine, or once we combine it as well? Okay. I wouldn't say which is better. Okay. I don't want you to compare strategy in trading, okay? Because again, today I use my strategy, I can make money. Okay, another trader who use a total different strategy can also make money. Okay, the key here again is which one do you feel comfortable with? Which one do you feel aligned with? To share with you a little bit, right? When I first started to kind of like learn about fundamental, I start to pick up a little bit more into what is fundamental, how I use fundamental to trade, right? My trading sucks, okay? The result sucks, which means that I totally can't really make money trading off just based on fundamental, okay? But at the same time, I appreciate the importance of fundamental, okay? And today I incorporate that, but it's not like the majority of it, right? That's why I say it's about 20% of my analysis come from fundamental. Okay? But I know traders who purely use fundamental and they can make money. Okay, so they say don't look at the chart, right? The chart doesn't really help much. You just look for like where to get in, where to stop loss. But the direction they use fundamental for 100%. Okay, so again, it really comes down to your style. Okay, what is your personality? How you actually mix and match, put them together. That's the key to it. Okay, so I really can't give you a clear cut answer as to which one is better, okay? Because you need to figure out this journey of yours is where you need to go and identify what works for you, okay? And this applies to every one of you here, right? Again, after today's webinar, some of you might say, "Oh, sentiment, I love it," okay? And you're gonna use it to make a lot of money. Some of you after attended today, you might say that, "Oh, sentiment, I still don't know what is it," okay? And then you're gonna put it aside, and then maybe you might not even come and touch it, right? So again, there's no right or wrong, okay? Needs to really depends on, okay. Um okay, so last question that I see over here is actually from Muhammad. He asked, dollar weaken, gold rises, is it because of other currency strength? No, I don't want you to over confuse yourself, okay? Keep it very simple. Okay, today if you are looking at a particular currency, right? So in this case here, we are talking about gold and dollar. So two things, right? Gold and dollar. Okay, just take a look at this tool itself. Okay, when price of the chart. Okay, so to clear things off, right? Make sure everyone gets this. Now, this chart here is gold against dollar. Okay, so if the price of this chart goes down, what it tells us is that number one, gold can drop, dollar can go up. Okay, so that's one scenario. The second scenario can be gold drop, dollar also drop, but gold drops more than the dollar itself. That's why the entire chart is still going down. Okay, so don't confuse yourself by adding in another currency in it. Okay, so any chart that you look at, usually in terms of currency, there's only two pairs involved. Just based on that two pair, that's it. Okay, don't confuse yourself on it. Okay, because definitely there are other currencies that are moving, but your focus is on the particular chart that you're looking. Okay, and just focus on that two currencies. Okay, so I hope that's okay. Good. I think I have like answered all your questions. Okay. Last few minutes for opportunity to clarify any questions that you guys have. Okay, in terms of like today's topic, right? Okay, so we actually are here. Okay, so if not, I think again, I acknowledge, okay, that this topic here is not something that a lot of people talk about, and therefore sometimes if you're very new, you might be a bit confused, a bit lost, not sure what's happening. Okay, but good thing is that this recording, this webinar is recorded. You can always review it on YouTube if you need to on a certain portion. Okay, and of course, I think this one here, for those of you who attended the last webinar, you already know about this. OctaFX has this Telegram group. Okay, so I believe if you are attending this webinar, live webinar here, you receive an email with this Telegram invite. You'll be able to click in and then join to that group. And of course, if let's say you have certain things you would like to maybe further clarify after that, okay, you can of course also post in that group. Okay. Okay, good. Terence, I see your question. Terence, you asked, can you share your risk management and what is your formula based on your experience? We'll dive deeper into that because again, 4-part series. The last one here we talk about risk management. Okay, I'm gonna share with you the different approaches towards managing risk. Okay, what you need to take note, what you need to consider. Okay, but as a general rule or general guideline, including myself, right, what I'm doing is never risk the amount of money that's going to affect your psychology. Okay, now a lot of times online you hear people say never risk more than 2%, never risk more than 1%. Okay, that's a good guideline, but again, that percentage of 1%, 2% is very different for everyone. Okay, so the general tip for me to you is that, or everyone here, right, is that when you do risk management, never risk money that will emotionally affect you. Okay? In other words, if you lose that trade, are you going to be affected emotionally? If the answer is yes, then you're risking too much. It doesn't matter what percentage that risk is, right? If that trade is going to affect you emotionally, you are already risking. Okay, so hope that helps. Hey, Oh, okay. So the last question here, I think you need to direct that question to OctaFX because if you're talking about the bonus promotion, okay, I think they do have, okay, they currently are running the 100% deposit bonus. It's better for you to clarify with OctaFX representative. Okay, so good. Right. So to give you guys a very quick heads up as to what we are gonna cover in next webinar and subsequent webinar, right? So this is the 4 pillars you can see over here: macro, fundamentals, sentiment, technical, and risk management. Okay, so this week we cover fundamental and sentiment. Okay, next week, okay, which is where we're gonna cover technical and risk management. So again, technical analysis, I know is a very interesting topic. A lot of people are gonna be excited about it. I'm gonna show you a very simple yet effective way to look at the chart. Okay, and the little teaser here for you guys is that you don't need any indicators. Okay, and I can tell you, if you kind of pick up the things that I share with you during that webinar, okay, you are able to forecast and project or even predict, okay, what will likely happen next in the technical chart with high probability. Okay, that's all I'm going to share with you. So make sure you attend that webinar. The last webinar we're going to cover is on risk management. Okay, so that's also very important because again, as traders, you won't be 100% sure and 100% right. Okay, so you need to always manage. Okay, so good. That's all from me today. Okay, so I hope you guys actually benefited and learned something from this webinar here today. If not, then we're gonna see you guys all on next Tuesday, right? Where we talk about technical analysis. Okay, so good. Keep a lookout of the email that you're gonna probably get from OctaFX, and then there's a link that you can join the Telegram. Okay, if you have any other questions, you can always follow up the questions from in the group itself. Okay, so that's it for me today. Have a good night later on, and I'll see you guys next week. Okay, so bye bye.